Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. We help people with their tax problems, and one tax problem that we've been seeing a lot lately from folks who are booking free consultations with us right now, which you can do using the link in the description below, is they're bringing us CP2000s, and they're saying, hey, I got this certified mail, the certified letter from the IRS, and they open it up, and it's a CP2000, and it looks something like this. Or like this at the top, and you can see right there it says CP2000, and they're freaked out because the IRS was proposing some very large amount due on the CP2000, and they're freaked out. They're like, why am I getting this? I thought I paid my taxes on my tax return, or I even got a refund. Why is the IRS coming back a year later and saying, hey, we're proposing more amount due on your tax return? So in this video, I'm going to tell you what a CP2000 is, why the IRS sent you a CP2000. I'm going to go through a sample CP2000 step by step, not step by step, part by part, and then tell you step by step what you should do if you received an IRS notice CP2000. Spoiler alert, the answer is not to file an amended return with the IRS. There's another way to go about responding to a CP2000. So the CP2000 is the IRS notice of underreported income. It's typically sent via certified mail, and the IRS generally sends the CP2000 when it believes there is a discrepancy between the tax return you filed and information reported to the IRS on tax forms such as W-2s and 1099s. Okay? And you can kind of, why is this blue? You can kind of see that in this box right here, where at the top, let me zoom in for you. It says, we received information from third parties, such as employers or financial institutions, that doesn't match the information you reported on your tax return. Okay, so what does that mean? That means you filed your tax return, the IRS received your tax return, they processed it, they compared your tax return to tax docs the IRS received with your Social Security number on it, such as 1099 NECs, for income you earned for services performed as an independent contractor, for 1099Bs, for stock transactions you made during the year, or even crypto transactions you made during the year, because some platforms do report that on 1099B, 1099R for retirement account distributions, W-2s for wages you earned as an employee. Basically, all those tax documents that you're sent typically at the beginning of the year by third parties, those also get sent to the IRS. Right? And if the IRS doesn't see one or more of those forms reported on your tax return, or at least the income from those forms reported on your tax return, they're going to send you a CP2000. In this example, CP2000 here, let me zoom out for you. Why does it turn blue? I don't know. Our client here, they didn't report, because the IRS shows you on here what the forms it received that it believes you didn't report. So right down here, it tells him under the section called Explanation of Changes to your 1040, it tells him, look, we think we received a 1099 NEC. That's for non-employee compensation. That's what you'll get if you're a freelancer or other independent contractor. We don't think you reported this 1099 NEC in the amount of $7,365 from this entity, and I redacted it because for privacy reasons. And here's the address of the entity that supposedly issued the 1099 NEC, right? And here's another one down here. On this one over here, this is for crypto stuff. I didn't block out the issuer here because it's most people have heard of BlockFi, RIP. In this case, this client of ours, they sold crypto on BlockFi, and they didn't report the crypto transactions on their tax return, right? So now the IRS came in and said, hey, we see that you had a crypto transaction, which in USD terms results in proceeds of $3,442 or $500 and $5,000 and $10,000. You didn't report on your tax return, so now we're going to assume that that was your income, and we're proposing an amount of tax based on that. One thing that I do want to say, let's go back to the other one here, is that a CP2000 is not a bill, okay? The IRS has not recorded this amount. Why does it all turn blue? I just want to highlight this. This amount, whatever it's proposing, it hasn't recorded this amount in the IRS's books yet. Okay, it hasn't assessed you for this tax. It is a proposed amount. They're proposing changes to your tax return. Okay, and it even tells you right here, this is not a bill. We haven't charged the proposed amount yet. So what the CP2000 is, it's actually an opportunity. The IRS is giving you an opportunity to say, actually, IRS, yes, I didn't report this income on my return. You're right about that, IRS. But I don't actually owe this full amount that you're proposing, IRS, right? Because think about it. What are some things that could make your tax bill lower? Okay, let's go to the example of the CP2000 I showed you, where the guy didn't report some 1099 income on his tax return, right? And the IRS is proposing an amount due based on his gross income on the 1099. Well, he may have business expenses that he can claim against that 1099 income. Okay, maybe he had mileage, right? Maybe he could take standard mileage or even actual vehicle expenses. Maybe he could take the home office deduction. Maybe he had some advertising expenses. Maybe he had some meals expenses when he was taking clients out to eat and discussing their situation. There's all these expenses that he could have had if he had reported the income and expenses properly on his tax return in the first place. And just because the IRS sent the CP2000 doesn't mean he can't take those expenses anymore. He can. He just has to now tell the IRS about them and say, look, yeah, I didn't report this gross income, but I also have all these expenses. You should only tax me on my net income. Okay? With the crypto and the stock stuff, more often than not, the IRS is going to assume that what you sold the crypto or the stock for is how much you made. It's not giving you credit for how much you paid for the thing. So if they see that you sold your Bitcoin, right? You sold one Bitcoin for, $50,000 here, and a week later you sold a Bitcoin for $45,000, and it could have been the same money recycled over and over, right? They're just going to assume each of those transactions are fully taxable, the amount of gross proceeds, without considering that, hey, you might have even had a loss, right? Because you might have bought your Bitcoin for more and sold it for less, but they're not giving you credit for what you paid for it. It's on you to report that information to the IRS, especially for crypto transactions, where the crypto platforms are not reporting your basis to the IRS, because sometimes the crypto platforms themselves don't even know your basis, right? Because if you bought crypto on Coinbase and then moved it to BlockFi, BlockFi doesn't know your basis in that crypto, right? It's on you to figure out your basis in your crypto and report it to the IRS. And that's what you got to do on your tax return. But because you didn't, you have to now explain the situation in your response to the CP2000. Okay, I know you probably just want me to get to the part like, hey, what should I do if I got a CP2000? But let's just kind of go over the CP2000 just really quickly here. So this part here, we've kind of beaten this part up, right? This is the IRS telling you what it thinks you owe, based on the income it believes you didn't report on your tax return. So this part here is the tax, right? Like if you had filed your tax return and reported your income in the same manner the IRS is calculating it here without any net, deductions or your basis or anything, it's saying that this should have been the additional tax you report on your tax return. It may assess or it may propose to assess a substantial tax underpayment penalty. What is this? This is a really nasty 20% penalty. You'll notice this 1545 right here is 20% of the $7,724, right? So it believes that you understated your tax by $7,724, and so it's imposing a penalty of 20% of that amount. Now, the IRS will only propose to assess this if it believes you understated your tax by a certain threshold. So it'll only propose to assess this if it believes you understated your tax liability on your return by the greater of $5,000 or 10% of your correct tax amount for the year. Okay, I'm going to create a whole video on the substantial underpayment penalty. That might sound a little confusing right now. maybe because it is, but I don't want to dig into that right now. I'm going to create a whole video on the substantial underpayment penalty in the near future. But that's what that line item is there. And then, of course, interest. IRS interest rate is currently at 8% as of the date I'm recording this. And, of course, it's proposing it's to assess the interest accrual that it's calculated on all this up until the date it's sent the notice. And then it's saying, hey, well, we think you owe us this, right, based on our math here. But of course, you're going to challenge this math because there's likely some expenses the IRS isn't giving you credit for when it's calculating this stuff. And frankly, you could probably get rid of this too. If it turns out that due to the expenses or your basis or whatever, that the amount you owe actually did not rise to the level of being subject to the substantial tax underpayment penalty. All right, down here, the IRS is telling you what it thinks you should do immediately. It's saying if you agree with the proposed changes, then you can complete, sign, and date the response form on page 7. You basically just check this box here. I agree with all the changes. I consent to the assessment of the tax and understand that, penalties and interest will apply. And you sign, and your spouse signs as well if it was a joint return. Pretty rarely would this be the way to go, right? I mean, sometimes it is. Let's say you didn't report a 1099 interest, right, from your bank for interest you made. And, there's no additional investment interest expense to claim. And there's no additional deductions there that I can take against that. The IRS's math is right. In that case, you probably just want to get it over with, consent to the changes, and pay the bill, right, before more penalties and interest accrue. But more often than not, at least for folks who come to us, who have these big, CP2000 proposed amounts due to, crypto or stocks or, unreported business income, that usually this is not the way to go. All right, let's go back to the first page. All right, if you don't agree with the proposed changes, right, then you need to respond to the IRS about it. And you can, complete the response form here, right, and say, sorry for the quality of this. I just pulled a random CP2000 for a client in our files and redacted it. You would check this. I don't agree with some or all the changes, and you would. Let's see here. I mean, we usually don't do this because we are usually under POA. So we have a different way we respond, but this is you. You just check this box. And then it says, please return this form. Include a statement signed by you that explains what you don't agree with. Also include copies of any documents, such as corrected W-2, 1099, or missing forms that support your statement. And yes, that's exactly what should be done. All right, let's go back here. All right, next page. All right. It is not necessary to file an amended return if you don't agree with our changes. Okay. They actually don't want you to file an amended return. That could actually hold up the process. And actually, what's going to happen if you file an amended return is they're just going to transfer the amended return, the 1040X, to AUR anyway. Okay, so it's just going to elongate the process if you do the amended return route rather than responding directly to AUR. This was a client who they actually did file an amended return in response to a CP2000. We took the case over. This is Leah in our office. You may have worked with her. If you worked with our office before, you'll get an 86C, right, which is basically saying, hey, we're transferring what you filed to a different department. So it's just going to elongate the process here. So that's what that is saying. Next part, if we don't hear from you, if we don't receive your response by this date, you'll get a statutory notice of deficiency followed by a final bill for the proposed amount due. So there is still some time here with the CP2000, right? The CP2000 is like a 30-day letter. This date here, this December 28, 2022, is 30 days after the date of this notice here. And they're basically saying, hey, you have 30 days to fix this. If not, we'll send you the 90-day letter, which is the statutory notice of deficiency, generally like a 3219 or something in that series. That's basically saying, hey, you have 90 days to file a petition in tax court to contest this. Now, sometimes that's the right answer. Sometimes it's not. If it's very straightforward, you should just simply respond to AUR to clear it up. But then after that, the 90 days passes and you don't do anything, then the IRS will generally assess the proposed amount due and the amount that they told you on the CP2000 and in the statutory notice of deficiency, the 3219, or other notice in that series. Okay, let's move on here. Okay, and now here's where the IRS shows the calculations on how it came out with its proposed amount due. It's saying this column here shown on return is what you reported. Okay, so in this particular taxpayer, he did not report any non-employee compensation on his tax return. Okay, but the IRS, as corrected by IRS, the IRS is saying you should have reported $23,680 of non-employee compensation, as shown here, based on these two 1099 NECs, the sum of which sum to $23,680. Right, and then it shows the other calculations that kind of spring from that. The self-employment tax deduction, obviously, because there's more income here, taxable income goes up. Okay, and all these other things are affected as well. It's showing the difference between what was reported on the return and what the IRS thinks should have been reported on the return. You kind of sum all these things up under tax computation, results in $7,700 additional tax due, not including penalties and interest. Okay, we've already gone over this bit here, explanation of changes. This is where they just tell you what forms that they think, or what income you didn't report. This is all kind of some mumbo jumbo here. So one thing to note, it's not mumbo jumbo. I mean, it could apply, right? Misidentified income. Basically, this is saying, hey, if any of the income in here actually isn't yours, for example, it's like fraudulent, then there's a corrective process here, right? It says send us the name, address, and taxpayer identification number of the person who received the income. And then to prevent future incorrect reporting to the IRS, notify the payer to adjust their records to show the correct name and taxpayer identification number. I was on the phone actually yesterday with a prospect who sold insurance, and he got a bunch of 1099s for commissions that were not his. And he had tried to figure it out and fight the IRS on this for quite some time, kind of following these guidelines, but it's just an absolute nightmare sometimes to get this stuff fixed. Negative taxable income. You had a zero or negative taxable income amount on your original or amended return, right? So it's just saying, hey, look, on your original return, well, he didn't actually. He had a 2,700. Oh, this might just be informational. If you had negative taxable income, then actually, this is saying that on the original return there was zero negative taxable income, and the IRS changed that in the shown on return column. I don't exactly know. I can't give full explanation for that because we actually didn't prepare this original return, so I don't quite know the details of what happened there. Child tax credit. So this is basically saying that there are credits like the child tax credit and the credit for underdependence that is directly affected by your gross income amount, right? So, the amount of those credits could change if there's more income on your return, right? So it can get kind of complicated, especially if you're claiming some income-dependent credits. This is telling about self-employment tax on self-employment income, kind of giving a basic explanation of self-employment tax. It'll put this in there if you got unreported 1099 NEC income or 1099 miscellaneous when that income was reported on miscellaneous. Right, changes to your income will affect your earned income credit eligibility, and income also affects these credits as well. All right, so next steps. This is what the IRS says you should do. If you agree with the proposed changes, right, send the response form. We went over this previously. And pay your tax. That's what it's saying. If the same error occurred in another tax year, file a 1040-X. Here, this is important. We send information about these changes to state and local tax agencies. If the changes we made to your federal tax return also impact your state or local return, file an amended state or local tax return as soon as possible. That is actually good advice. And what you're going to do in this process eventually is calculate a return as though you had reported everything accurately with all your deductions and expenses. You're not going to file that as an amended return, but best practice is to independently calculate that right? And in your tax software, I would recommend that you file an amended state return, right? Because you can still do that for the state. They haven't sent you one of these notices yet, right? So you can easily fix the issue with the state by filing an amended return and paying any additional tax you owe based on that amended return, right? So that you don't get one of these notices with the state. You can kind of preemptively deal with that. With the federal government, though, you're kind of past that stage. The IRS has kind of caught you, so to speak. I don't mean caught in a bad way. Like, you may have actually just moved and not received the 1099 or whatever it was. Things happen, right? I get it. I've heard it all from clients. But this is actually good advice here. And this is something we offer when we deal with clients. CP2000 is like, hey, yeah, we can respond to the CP2000 for you, kind of take care of this issue. But then, for additional fee, would you like us to also amend your state return, right? So we give that choice to the client, or do you kind of want to take the gamble and not deal with the state right now and let them, maybe come after you based on the original return? All right, now here's where it shows you the calculation of the penalties. I went over the substantial tax underpayment penalty previously, so I'm not going to dig into this. Here, interest, it's just showing you the interest calc on this notice. IRS interest rates change quarterly. I mean, it was 3% for a while, for several quarters. It's increasingly gone up since then, 4, 5, 6. It's up to 8% now. Additional information. This is kind of just standard language on many IRS notices. It's talking about, publication 1, taxpayers' rights. You can look at information on the IRS website about this notice. For tax forms, right? Call that number, go there. This is telling you this isn't an audit. Okay, so, and this is kind of important to know because it does feel like an audit. But this is an automated notice, right? That is computer generated. CP stands for computer paragraph, CP2000. There's not one designated revenue agent who is responsible for this matter, right? And oftentimes, if you simply respond to the CP2000 and your explanation appears reasonable and your documentation supports your explanation, they'll just accept it, okay, without really digging into everything like an auditor would. Okay, so CP2000 is not an audit. Okay, it feels like an audit, but it is technically not. That said, notice this last part of this sentence here. Your return may be subject to an examination. Okay, for small potatoes things, we don't usually see this. Okay, but if you didn't report a lot of 1099s on your Schedule C, and now you're claiming these big old deductions, it could be pulled for an audit, right? If the IRS would question some of those expenses. So, and then next is just the response form, which we've already gone over previously. So, all right, now I'm going to tell you step by step what you should do if you got one of these beauties, these CP2000s. Step 1, make sure you actually didn't report the income the IRS says you didn't report. Okay, so go to the page on the CP2000 where the IRS breaks down for you the income it thinks you didn't report. It's going to be under that section called, explanation of changes to your 1040. You go through this list and make sure you actually didn't report this income. Okay, go through, each one of these. This one is short, thankfully, but line by line, and ask yourself, did I actually? Okay, I take that back. First step is actually make sure that you actually earn this income. Okay, before we get into did you actually report it, make sure you actually earn this income. Is this income actually yours, or is this potentially fraudulent? Right? For example, if under this section you see the IRS has record of receiving both, 2 1099 NECs, okay, but you didn't actually receive, from this entity here, which I redacted for privacy reasons for my client. The IRS is saying that this company paid you $23,000. Okay, you need to go back to your records and make sure that you actually earned $23,000 from this entity. It was the same one for this client. If you didn't, and it's possible, I've seen it where the payer, they issued 1 1099 and they issued a corrected one, but they didn't indicate it was corrected on the corrected one, and so the IRS thinks they received 2. So it's possible that maybe this one was $7,365 was the original one, and 16,315 was a corrected one, the IRS doesn't realize that it should only be the $16,000 amount. It thinks, instead of only $16,000, they received $23,000, right? In that case, that's something you gotta tell the IRS about, because what you're doing as you go through the steps is you should be making like a list of things that you want to mention in your response to the IRS, right? Because you're going to lay it all out to the IRS at the end of these steps in a big old letter. And I'm going to show you kind of an example we did for one of our clients, right? If you didn't actually earn, one of these 1099s, you did not actually receive this money, that's something you got to put in the letter, okay? So, now, for the income that you did earn, okay, but that you didn't report in your return, check for deductions, right? Let's say you did make all this income, right? Or you made the 16 but not the 7, right? So when you respond to the IRS, you're going to say, I didn't make the 7. Okay, I only made the 16. Okay, but of the 16, do you have any deductions you can claim against the 16? Right? I'm not going to tell you this taxpayer's industry, but let's say you're an Uber driver, right? This taxpayer's not an Uber driver. But let's say you're an Uber driver and you got a 1099 from Uber for $50,000. Okay? That's the gross income you made from Uber reported in the 1099. All right? But you didn't report that 1099 on your tax return. Well, what's going to happen? Well, 9 to 15 months typically after you file your return, the IRS is going to send you a CP2000 and say, hey, you didn't report this $50,000 1099 from Uber. And they're going to send you the CP2000 proposing a huge amount of tax on that, right, with penalties and interest. But as an Uber driver, you have deductions you can take against that gross amount. A big one is Uber's cut. At least in the Uber returns I prepared, or my team has prepared, that Uber will send you a gross amount, right? And Uber's cut, whatever it is, what is it? I think it's like, how much do they take? 20%? I'm not exactly sure. If you know, put it in the description. I think it's like 20% or something, right? 25%. You would put that as an expense, right, against that income, because that's like an expense you had to pay. You didn't get the $50,000. You got the $50,000 less Uber's cut, right? So you shouldn't be taxed on that portion that actually went to Uber. Uber would pay tax on that, right? Also, obviously, you're driving a car. You have vehicle expenses. If it's your car, you could potentially take depreciation on it. You could take your, all your repair costs and, a portion of your insurance. And this is all to the extent you drove versus personal miles, business miles versus personal miles. If that math doesn't work out for you or that's too complicated for you, you can just take a standard mileage deduction, right? So there's all these expenses you can claim against your Uber income. And you got to make a list of these things and actually calculate them, just like you would have calculated them if you put them on your original tax return, right? So, but let's say those expenses add up to $30,000, right? IRS is trying to tax you on 50, but you have 30,000 of expenses. You should only be taxed on the 20, right? This is another thing you absolutely have to mention in your response to the IRS on this. Okay. Step 3. Well, this is what we do for our clients. Right? I believe this is best practice. Recalculate your return in your tax software as though you had done it correctly the first time. Okay? Some people, they'll just like dump all this information to the IRS and let the IRS calculate it. Now, for our clients, we want to actually calculate what the right number is, not trust the IRS to do it correctly. Okay? That means going into your tax software, recalculating the return, put in the 1099s you missed or whatever income you missed, but then also put your deductions in there against that income or your basis, right, if it was an asset you sold. And then see what your tax software tells you is the correct amount of tax liability, right, on your return. Once you've done that, next step, figure out what you actually owe the IRS. Okay, because after you've done that, what you actually owe the IRS is going to be a lot less than what they're proposing on the CP2000. Okay, and it's simple, right? Well, it's kind of simple, but in general, the formula for this, okay, and calculating how much you actually owe the IRS at this point, is the amount you owe line on that recalculated return. There's a line that's there that says amount you owe. Add to that any refunds you received for this tax year after filing your original return, which was incorrect. And subtract any payments you made to the IRS along with your original return or thereafter, right, for this tax year. Okay, and that should give you the amount, in most cases, the amount that you actually owe the IRS before penalties and interest. Okay. You probably also want to determine if you're actually still subject to the substantial underpayment penalty, because if you aren't, you want to put that in the notice. And again, I know that bit of this video probably sounded a little complicated. I'm going to make a separate video on the substantial underpayment penalty in the near future. Okay. There's also the calculation of other penalties and interest, fair to pay and interest accrual, right? If you could take a shot at calculating that as well. The fair to pay penalty is 0.5% a month, or part of a month that you didn't pay tax in, and the interest is dependent on whatever the interest rate is for the year or for the quarter. Right now it's 8% annualized. So that could get a little complicated, though, calculating the penalties and interest or estimating that, right? But you want to get an idea of what you're actually going to have to owe the IRS here. Don't trust the IRS to just take your data and do the calculations correctly. You do it. You take control of the narrative here, okay? Then when you've done all this, you got to write a letter to the IRS explaining your case. Here's a sample one we did recently. We usually like to put like a very nice, let me go here. Here's a sample one we did recently. We usually like to put like a nice heading on it, make it look very professional, right? So that they know that, hey, we're a professional business here. We know what we're doing. We do this a lot. We have a standardized form for it, which we do. People have different opinions, but I believe that sending it like in a very professional format to the IRS, it lets them know that, hey, we mean business here and we want to deal with this issue, and we've laid out our case below, and we're going to expect that you guys, review what we send you. Okay, so we put kind of this heading here. I'm not going to show you the whole letter because like there are I could have redacted like parts of it, but it would just then showing you the letter wouldn't make sense anymore because so much is redacted. I could show you this. So basically we're saying that, look, we agree to some items. It's like, look, yes, he didn't report all this stuff to you guys on his return, but we don't agree. Well, okay, let me scoot up here. But we don't agree because in this case, the IRS was trying to assess him, proposing an assessment of tax on his gross crypto proceeds of $50,000, right? So they were thinking, well, he sold $50,000 worth of crypto in various transactions during the year. We're going to assess him tax on $50K. But the crazy thing about this was all just dispositions of a stable coin, USDC, USD coin, right, which is pegged to the dollar, right? So there's actually no gain or loss on any of these $50,000 of transactions. It was just he had put money into BlockFi, RIP, and then BlockFi like converts that cash to USD coin, and then he would earn interest on the USD coin, right? And that's what this 1099 miss was for, right? For the interest income from BlockFi. And then he sold, right? And then he cashed out of the USD coin, right? $50,000 worth. But there's no gain or loss on the USD coin, right? The only income he received was the interest income. Okay, the underlying value of the USD coin didn't change. He put 50,000 in, he took 50,000 out. But they were trying to tax him on that full amount, right? There's some other stuff down there too that we wrote, and of course we attached the supporting documentation from his BlockFi account. We attached the original return he filed. We attached the corrected return where we recalculated his stuff on, and at the top we put recalculated dash CP2000 on every page. And he was no longer subject to the substantial underpayment penalty. So we said that, and we said, hey, look, yes, he does owe a bit more tax based on these other items, right? Like the missed 1099 for the BlockFi interest income. But the bulk of this, right, the $50,000 of crypto sales, he shouldn't be taxed on. And then we said, hey, we're proposing what we believe is that the taxpayer actually owes this, not the huge amount that was originally in the CP2000. And then where do you send this? So you're going to go back to your CP2000 here. We strongly prefer faxing rather than mailing, because you can kind of get the receipt of the fax immediately. That's what we do in our office. I know the IRS, has that response form and everything. And I guess if you were the taxpayer, you probably want to do the response form. We don't, because we just, fax on our professional letterhead and all that. But you would fax your response to 1-877, well, whatever the fact, I'm not even showing you the thing. You would fax your response to the fax number at the at the top of the notice. And you'd put your AUR control number on there. You'd put your social, kind of like how we did, all up here, just to make it as easy as possible for AUR to process your response. It will take them some time to process the response. 90 days right now is what we're seeing, and then hopefully what you'll get at the end of this is the CP2005. Let me pull one of those. All right, this is like the best case, right? There's no changes. Thank you for, why do I keep forgetting to press this button? Thank you for your response to the notice we sent you about your taxes. We're pleased to tell you the information you provided to resolve the tax issue in question, and our inquiry is now closed. Okay, so that's the best solution. That's not always what happens, though. Sometimes they want more information. They'll send you another notice for more information. Sometimes there's this kind of back and forth, a nice little song and dance you got to do with the IRS AUR automated Underreported unit. Okay, this video is now 35 minutes, over 35 minutes. That's all I have to say about the CP2000, folks. If you received a CP2000, you can reach out to us at choicetaxrelief.com. You can call 866-8000-TAX to book your free consultation. We also have a link in the description below of this video where you can book your free consultation. I also have some other tax relief videos you can check out on the left-hand side of the screen, because sometimes, look, you got the CP2000 and you actually owe the tax and you can't pay the tax. What should you do? Explore your tax relief options. All right, folks, thanks so much for watching, and I'll see you in the next video. Bye-bye.